for our Friday Spotlight. We're diving into crypto. For insight, I want to bring in Andy Baehr, head of product and research for CoinDesk Indices. Andy, it's good to see you. I know sometimes we're in person. It's good to see you on camera here. All right, let's talk a little bit about the volatility that we've seen this week. The volatility has hit just about every sector. It's been a very headline-driven market, no matter the asset class that you want to touch on. How would you characterize the volatility as it pertains to crypto market this week?
Yeah, sure thing. And sorry to not be with you in person there. We'll get you next time. Usually we say that Bitcoin is not a flight to quality asset, that it's not kind of your safe haven when markets start to capsize. You usually go into US Treasuries for that, but that didn't really work out that well this time. By contrast, where did the money go? A lot of the money stayed right in Bitcoin. If we look at performance of equities and Bitcoin since the Liberation Day speech, equities are down, marked to about where they are now, about 5.5%. Bitcoin only moved about 3.33%. So right up around here, around 84,000 in Bitcoin, we're not too far from where we were a week ago. So its resilience has been very strong. When you look at things like funding rates in the perpetual futures markets or overall volumes, the market's pretty healthy. So Bitcoin, which is a sort of tariff-free and sovereign-free and trade war-free asset, has done a remarkably good job given how young an asset it is.
I guess you could say relatively speaking, but gold has outperformed in general in this, especially when, you had the extreme volatility and worries about impact to economic growth and potential for recession. And there are some in the crypto space who say, for instance, Bitcoin could be the equivalent of gold, but it didn't perform that way. Why is that?
Yeah, no, I think that's fair. And the comparison to gold at the same time is encouraging because it means that people are understanding the store of value concept. At the same time, when gold outperforms, we feel as if we have some explaining to do. Bitcoin is still a very young asset. And remember that we don't have a lot of banking in the crypto world available to us. So to the extent that liquidity becomes a little bit more dear, crypto assets sometimes suffer a little bit from that currently liquidity dearth. So that should be improving with the regulatory environment changing. So we're pretty pleased to see a lack of volatility or a lack of fallout with Bitcoin. We're pretty pleased to see where it is right now. We do think that the narrative that's driving gold prices higher, especially with respect to inflation, we can talk about those Michigan numbers that came out this morning, should be very supportive to Bitcoin's price. And remember, Bitcoin's just at the beginning of its adoption journey. It has a fixed supply, but still a very narrow holding base. So as that expands, we expect Bitcoin's kind of right-tail distribution to give it plenty of fuel for performance.
So why would weak consumer sentiment numbers be supportive of crypto?
Absolutely. So it was, really those inflation expectations numbers that came out this morning, 6.7% expected one-year inflation, the highest since 1981. When we think about the two drivers of Bitcoin price, it's inflation expectations and nominal interest rates, which help combine to create the sort of real expected interest rate. If consumers are thinking that inflation is going to be higher than it was since 1981, I'm trying to think what was the number one song back then, or the favorite TV show back in 1981. But since then, a lot has changed. And if we're thinking about inflation numbers back from that era, there's going to be a lot of urge to move out of dollars into an asset which is more stable and has a similar amount of limited supply. So that's I think very supportive of a near-term Bitcoin support. Also, look at since the election day, right? Since the mandate was given to President Trump to be the leader again, Bitcoin's been up 21%. Equities have been down 6%. Gold's been up a lot too. But if we're in this environment where safe haven, limited supply assets, store of value assets are going to help people navigate this period, it's really encouraging to see that Bitcoin's doing an exceptional job for a 16-year-old asset.
And then, Andy, I want to ask you, are you seeing any structural changes in how institutions are positioning crypto, especially when it comes to these like macro stress events?
Yeah, I mean, it's funny, the ETF flows have kind of told a mixed story in the first quarter. part of those ETF redemptions related to spread positions against futures. So we really can't think of any kind of redemptions in the ETFs as being necessarily a retraction. Right now, there's been a lot of distractions. Bitcoin is, in environments like this, is on very few people's mind as their number one agenda item when the treasury markets are sort of turning over. We've seen good consistency, very good liquidity in the crypto markets, positive funding rates on perpetual futures, healthy activity in the crypto options market. And all those point to this sign that the trading environment hasn't really shrunk away from participating, right, in these kind of conditions. So look, crypto loves to trade. Right now, the best thing that the crypto market can do to maintain people's interest and their feeling of faith that the market is growing is liquidity, and liquidity has been quite good.
Well, you heard the Fed speak about liquidity today. Actually, our Fed officials speak about that, and that certainly added some momentum to riskier assets. So once again, seeing Bitcoin higher, about 5% higher at the moment, near 84,000. Ethereum also higher by about 3.5%. That's Andy Baehr, head of product and research for CoinDesk Indices. Andy, always good to talk to you. Thank you so much for joining us this Friday. Have a great weekend.
You too.